Hello students, we are going to discuss on the topic case studies on deductions from gross total income. So first deduction in respect of case study on section 80C. Here we take Mr. Raja made the following payments in the financial year 2023-24 to avail of the advantages of deduction under section 80C. 6 issues here are for our consideration. Number 1, LIC premium paid rupees 8,500 on his own life policy was taken 1st April 2011, that is before 1st April 2012, and sum assured is 25,000. So as the policy is taken before 1st April 2012, the premium is limited to 20% of the sum assured. Sum assured is 25,000 means 5,000, but actually paid 8,500. So allowable amount is only 5,000. Second item, LIC premium paid 12,000 on married daughter's life, no problem whether married or unmarried, any premium paid on daughter's life is allowable as deduction, and policy was taken in June 2013, that is after 1st April 2012, and sum assured is 1 lakh. So deduction is limited to 10% of policy value or sum assured, that is 1 lakh, 10% comes to 10,000 but paid 12,000. So deduction will be limited to rupees 10,000 only. Then item number 3, LIC premium paid rupees 30,000 on life policy taken in the name of his wife, policy taken in May 2012, that is after 1st April 2012. So limited to 10% of sum assured of rupees 3,50,000, that is 35,000, but paid actually 30,000. So 30,000 is not exceeding 10%, so it is allowed. Deposited in PPF rupees 60,000, it is straightway allowed. Investment in NSC 40,000 and interest accrued there on 1,000, taken together 41,000, straightway allowed. Payment for building loan 15,000, allowed. But under the Act 80C, the available deduction may be more than 50, but the amount available for aggregate deduction payment is limited to rupees 1,50,000. So here it is seen that Mr. Raja has allowable amount of aggregate payment or deduction 1,61,000, but it is limited under section 80C to 1,50,000. So deduction is allowed up to 1,50,000. Mr. Ghosh made the following investments in the previous year 2023-24. Premium 3,000 paid per month, that is yearly 36,000 for dependent brother, no problem, it is allowed. Sum assured 4 lakh, that is policy taken after 1st April 2012. So 10% is available on sum assured, that is 40,000, and he paid actually 36,000, which is not exceeding 10% of sum assured. So it is allowable deduction in computing aggregable allowable deduction, limited to total 1,50,000. Second item, premium on life insurance policy taken in the name of his parent dependent on him, payment made during the previous year rupees 52,500, sum assured is 2 lakh, and policy was taken before 1st April 2012. Then item number 3, deposited rupees 2,000 per month in PPF. So yearly it comes to 30,000. It is to come within the total aggregate amount. Payment of tuition fee for 2 children, it is allowed, not exceeding 2, and it is paid 15,000. So it is straightway allowed to be considered in the aggregate amount 15,000. Then paid rupees 20,000 for purchasing a residential flat in Kolkata, it is also allowed deduction in the total aggregate amount. Now section 80 CCD for NPS, National Pension Scheme, it is very much important. Here we see Mr. Z, a central government employee who contributes rupees 70,000 to his NPS account. His salary details are basic salary 2 lakh 20, dearness allowance 80,000, other allowances and perquisite 2 lakh, investment made under 80C 80,000. So here you see that the total salary for this purpose of claiming deduction under NPS 80CCD is 2 lakh 20 plus 80, that is 3 lakh, and as it is contributed by Mr. Z, it is limited to rupees 70,000 whatever he paid, and 10% of basic plus DA, that is 30,000. So the amount of claim is only 30,000. Now next example, Mr. Ramesh is a central government employee whose total contribution to NPS in the year amounts to rupees 70,000. He contributes 50% of it, and rest 50% is contributed by his employer. His salary details are basic salary plus DA taken together 3 lakh, other allowances and perquisite 1 lakh 25,000. It is not to be considered here, and his investment in ATC is 90,000. So out of 1 lakh 50,000, already 90,000 has been made invested in ATC. So rest 60,000 is available, and what he is entitled to get, he is entitled to get under section 80 CCD lower of the following: NPS amount actually contributed 50% of 70,000, that is 35,000, and 10% of basic salary plus DA comes to 30,000. So 30,000 he can claim. Regarding contribution by employer to his MPS, that is where the employer has contributed, so in that case, Mr. Ramesh can also claim deduction under section 80CC due in respect of contribution made by employer 35,000, which is restricted to 42,000 only, being 14% of his salary. Salary 3 lakh, 14% of that 42,000, and contributed by government 35,000. So entire amount is allowable as deduction. However, if the old tax regime is opted by Mr. Ramesh, the claim of deduction under section 80 CCD would have been restricted to rupees 30,000 only, being 10% of basic salary and dearness allowance, that is 2 lakh 10 plus 90,000 into 10%. Case study on deduction for equity investment under section 80 CCG. This is deduction under section 80 CCG, where investor is the first time investor and his taxable income does not exceed rupees 12 lakh. Here we see Mr. Jadhav is a first time investor who decides to put a sum of money of 50,000 into his equity investment, so deduction allowable. Being first time investment, Mr. Jadhav is eligible to a deduction of 50% of tax deduction on his total investment. If the taxable income Mr. Jadhav amounts to rupees 5,50,000, he is to get deduction under section 80 CCG of rupees 25,000, being 50% of the equity invested, and this deduction is available since it is assumed that his taxable income is not exceeding 12 lakh. Next example, Mr. Sunil, being a first time investor, invested in equity shares of rupees 60,000 in the previous year 24-25, and his gross total income in the PY is computed at 18 lakh, and in situation B it is 10 lakh. So in situation A, his gross total income exceeding rupees 12 lakh, 18 lakh. So no deduction under section 80 CCG for equity investment. But in situation B, as the investment made by Mr. Sunil does not exceed 12 lakh, the maximum ceiling of criteria, deduction for payment of medical insurance premium section 80D. Mr. Sen paid the following medical premium in the previous year 24-25. Rupees 25,000 paid in cash on his own health benefits. If it is paid in cash, no deduction is allowed. Rupees 40,000 paid by cross check, as it is other than cash, it is allowed on his health and also on spouse, taken together 45,000. So it is totally allowed as deduction up to rupees 25,000 only, because none of the spouse is senior citizen. So only 25,000. Rupees 55,000 paid by cross check on his health, spouse and dependent minor child. His spouse is a senior citizen. As spouse is a senior citizen, the amount of deduction will be rupees 50,000 under section 80D. rupees 38,000 paid by cross check on his health and also 42,000 on his parents health. One of his parent is a senior citizen. Rupees 50,000 paid by cross check for self, spouse and for parents. Rupees 65,000. Both Mr. Sen's spouse and the parents are all are senior citizen and they have paid 50,000 for self and spouse and for parents 65. So total deduction would be available under section 80D. For self maximum 50,000 because senior citizen, and for parents though paid 65,000 it is limited to 50. So total 1 lakh is available as a deduction under section 80D from the gross total income of the taxpayer Mr. Sen. Deduction for medical treatment from gross total income under section 80DD. Example, Mr. X has incurred following expenditure with 40,000 for medical treatment including nursing, training, rehabilitation of his dependent brother. Disability is 50%, that is more than 40% but less than 80%, and in that case amount of deduction will be 75,000 straight away whether he has incurred 40,000 or whatever irrespective. In the second point B, 55,000 rupees paid for medical treatment of his wife, disability 80%, but failed to provide a copy of the medical certificate as evidence of the dependent's disability. Rupees 1 lakh for medical treatment of his parent, disability 90%, more than 80%, and duly supplied by medical certificate as evidence of the dependent's disability from the competent authority. So in that case, all the conditions are fulfilled, that is disability above 80%, certificate of evidence of disability is provided. So in that case irrespective of actual expenditure of 1,25,000, in this case 1,25,000 is allowable as deduction. Case study on deduction from gross total income, section 80 DDB. This is deduction in respect of medical treatment or specifies disease of the taxpayer. Here Mr. P, an Indian citizen aged 57 years, incurred expenditure 60,000 in the previous year 24-25 for himself for his own treatment for a specified disease mentioned under 80 DDB. So here P can claim rupees 40,000 only because the deduction allowable is actual expenditure or rupees 40,000 whichever is less. If in the above problem Mr. P would receive a sum of rupees 30,000 from an insurance company, the amount of deduction under section 80 DDB shall be limited to rupees 10,000 only because already 30,000 insurance claim has been recovered from the insurance company. So maximum further 10,000 can be claimed under section 80 DDB if Mr. P would have already recovered 30,000 from insurance company as insurance claim. Mr. T, an Indian citizen, spent rupees 1,75,000 for his senior citizen parent in respect of specified disease mentioned under section 80 DDB in the previous year 2024-25. Here Mr. T can claim rupees 1 lakh under section 80 DDB actual expenditure spent 1,75,000 or rupees 1 lakh whichever is less is allowable as deduction. Deduction in respect of loan taken on higher education under section 80E from gross total income. Mr. M took a loan from bank for higher education for his daughter in UK in the previous year 2017-18. In the previous year 2024-25 he paid interest for the loan for education amounting to rupees 75,000. So in that case deduction under section 80E will be limited to rupees 75,000 only in the assessment year 25-26, maximum 8 years or till loan paid whichever is less within the range. As he has taken in the year 2017-18, that is 8 years has not yet been expired, so it is available for deduction. Mrs. Ghosh, a widow, took a family loan for higher education for her son in Germany. She paid interest of rupees 36,000 for the loan in the previous year 24-25. In that case, Mrs. Ghosh took a family loan not from any financial institution. Basic condition is failed. The loan should have been taken from any financial institution. But the purpose of the loan was okay because it was taken by her for higher education of her son in Germany. But as the loan was taken not from any financial institution but it was taken from family members, it is outside the scope of section 80E. So she is not entitled to deduction under section 80E in the assessment year 25-26 for interest payment of rupees 36,000. Now, case study on deduction from gross total income for interest on home loan paid under section 80EE. Here we see Mr. A bought for the first time a house valued to be 65 lakh above 50 lakh. It should have been within the range of 50 lakh and took a home loan of 30 lakh. It is within the range of sanctioned loan 35 lakh. Mr. A paid home loan interest 48,000 in the previous year. So tax treatment of this allowability will be as follows. As Mr. A satisfied condition in terms of 80EE, in terms of section 80EE, first time buyer, it's okay. Home loan sanction 30 lakh, not exceeding the loan cap of 35 lakh, it's okay. Loan was sanctioned in the previous year 2016-17, it is okay. Interest on home loan paid in the previous year was 48,000, not exceeding the permissible limit of deduction in a year of 50,000, all are okay. But as the value of the first home purchased by Mr. A is 60 lakh, being in excess of the cap value of 50 lakh of the value of property purchased, he is not entitled to avail deduction under section 80EE in the assessment year 25-26. If in the above case, the value of the new home purchased by Mr. A were 42 lakh, not 60 lakh earlier, 42 lakh, then Mr. A would be able to enjoy deduction under section 80EE in the previous assessment year 2025-26 for satisfying all the conditions including value of new home within the cap of 50 lakh in respect of interest on home loan, allowable up to rupees 48,000 actually paid by him, it is fully, and it is up to 50,000 allowable deduction. He has paid interest of 48,000, so it is fully allowed. Case study on deduction from gross total income for interest on home loan paid under section 80EEA. It is another available deduction from gross total income in respect of buying property, residential house property. So here we see Mr. Ramlal acquired a new residential house on 1st May 2020. Actually, the time period is from 1st April 2017 to 31st March 2022. Within this period, if it is allowable deduction of the interest subject to a maximum of rupees 1,50,000. Mr. Ramlal is not the owner of any other house. The stamp duty value of the property should not exceed 45 lakh. Here, value of the house property stamp value is only 38 lakh. So all conditions are fulfilled. So Mr. Ramlal satisfied all the conditions of section 80EEA as regards date of purchase, that is 1st May 2020, within the time period from 1st April 2019 to 31st March 2022. He is not the owner of any other house property. Stamp duty value of the house purchase is 38 lakh, not exceeding the limit of 45 lakh. Thus, Mr. Ramlal is entitled to enjoy benefit under section 80EEA for the home loan interest payment of rupees 1,40,000 being the ceiling, being the amount not exceeding the ceiling of rupees 1,50,000. However, this deduction of home loan interest of rupees 1,40,000 is in addition to deduction available under section 24B under the head income from house property. A study on deduction from gross total income for interest of loan payment on purchase of electric vehicle under section 80EEB. If any electric vehicle is purchased within the time span between 1st April 2017 to 31st March 2013. Here Mr. Roy, an individual, purchased electric scooter for his personal use and took a loan from the bank on 1st October 2022. During the previous year 2024, he paid interest of 84,000 for the loan. Here Mr. Roy purchased within the time span, took loan from financial institution and paid interest 4,000 not exceeding 1,50,000. So Mr. Roy fulfills all the conditions of section 80 EEA, and as such a deduction for interest for purchasing electric scooter by Mr. Roy is allowed under section 80 EEB. Mohammad Selim purchased an electric vehicle for business use by taking a loan from bank on 1st September 2020 and paid interest of which 1,25,000 in the previous year 2024-25. Mohammad Selim registered electric vehicle in his own name, not in the name of the business. So, despite fulfilling all other conditions, Mohammad Selim, who bought the vehicle and registered it in his personal name but used the vehicle for business purpose, Mohammad Selim is not entitled to enjoy deduction under section 80 EEB in the assessment year 25-26. Now deduction under section 80G. This is deduction for donation to various funds or institutions. Mr. Sam made the following: rupees 10,000 in cash to an approved charitable institution. It is not allowable as it is paid in cash above rupees 2,000. Rupees 50,000 paid to PM's drought relief fund. PM's drought relief fund is allowed a deduction at the rate of 50%. So 25,000 will be allowed as deduction. Paid rupees 20,000 to National Children's Fund. It is 100% allowable. So 20,000 is allowable under section 80G. Paid rupees 10,000 to Rajiv Gandhi Foundation by check. As the amount is donated to Rajiv Gandhi Foundation, it is entitled to get 50% deduction of the amount donated, that is 5,000 is allowed as deduction under section 80G. Rupees 1,500 in cash to a temple authority. As it is paid to a temple authority, allowable deduction is at the rate of 50%, and still it is allowable though made in cash because the amount of donation is not exceeding 2,000. So 50% of rupees 1,500 donated in cash to a temple authority, that is rupees 7,750, is deductible under section 80G. Deduction in case of rent paid under section 80GG. Here we see Mr. Robin, a self-employed person, paid rent of 10,000 per month for his rented accommodation in the year 2024-25 for the previous year 2024-25. Mr. Robin has no residential house property in India or abroad. His total income for the previous year is rupees 3 lakh, but before deduction under section 80C to 80U. So in this case, deduction allowable under section 80GG is that rupees 2,000 per month, that is yearly 24,000. 25% of total income, that is 3 lakh into 25%, it comes to 75,000, and excess of rent paid over 10% of total income. Rent paid actually 10,000 per month, so it comes to excess of actual rent paid over 10% of total income, that is 10,000 into 12, that is 1,20,000, minus 10% of total income, that is 30,000. So 1,20,000 minus 30, it is 90,000. So we get three alternatives. List is available for deduction. So available deduction under section 80GG is rupees 24,000 being the least amount of the above. Then deduction in respect of certain donations for scientific research or rural development under section 80GGA. Here Mr. Saha paid donation of 25,000 in the previous year 24-25 to Netaji Subhash Open University for conducting research in social science, duly approved. His gross total income for the previous year includes income from business provision of 3,20,000 and salary income of 2,90,000. Business income 320 and salary income 290. Mr. Saha is not entitled to deduction under section 80GGA in the assessment year, so since his gross total income includes profits and gains of business or profession. That is, deduction under section 80GGA is allowed only if the taxpayer total income does not include income under the head income from business or profession. As in this case, Mr. Saha has income from business profession of 3,20,000 in his total income, he is not entitled to get deduction under section 80GGA. Mr. Saha is not entitled under section 80GGA. It is deduction in respect of profits and gains from business or profession for collecting and processing of biodegradable waste. Here Mr. Z earned 3,50,000 from his business from the activity of collecting and processing of biodegradable waste in the previous year 2024-25. Now, Mr. Z is entitled to deduction under section 80 JJA in respect of his income from business activity of collecting and processing of biodegradable waste to the extent of the lower of the following: 100% of such profit from such business of collection and processing of biodegradable waste, or rupees 5 lakh, whichever is lower. So here we see his business income from such activity is 3,50,000. 100% of that 3,50,000 and 5 lakh, lower is 3,50,000. So deductible amount of deduction under section 80 JJA in the hands of Mr. Z is rupees 3,50,000 for the assessment year 25-26. Rex Limited, Indian company engaged in industrial undertaking, employed 12 new workmen in its business for the previous year 24-25 and paid additional wages of 2,56,000 for the new workmen. Rex Limited, being Indian company engaged in industrial undertaking, is entitled to deduction under section 80 JJAA amounting to rupees 76,800, that is restricted to 30% of additional wages paid to the new workmen in the assessment year 2025-26, and also to enjoy same deduction in the forthcoming rest two assessment years 26-27 and 27-28. Deduction for intercorporate dividends under section 80M. X company limited, an Indian company, received dividend from Y company limited, a domestic company, of which 2 lakh in the previous year 23-24. X company limited declared and paid dividend of which 1,60,000 1 month prior to its due date of filing of return. Here the dividend paid by Mr. X company dividend paid by X company limited out of its intercorporate dividend received from Y company limited is available for deduction under section 80M. To check double taxation of dividend, the eligible amount of deduction shall be 1,60,000, that is lower of dividend paid and received. Lower of dividend is how much? Dividend received 1,60,000 and dividend received 2 lakh, but dividend paid 1,60,000. So the lower of these two, that is 1,60,000, is allowable as deduction. A company limited, an Indian company, received from B company limited, a domestic company, dividend of 2 lakh in the previous year 2023-24. A company limited declared and paid dividend of 2,40,000 1 month prior to due dates of filing of return. Here the dividend paid by A company limited out of intercorporate dividend received from B company limited qualifies deduction under section 80M. However, the eligible amount of deduction under section 80M shall be rupees 2 lakh, lower of dividend paid, that is 2,40,000, and receipt of intercorporate dividend from B company limited, that is 2 lakh. That is 2 lakh. It is eligible for deduction. This is deduction in respect of royalty income by author under section 80 QQ. Actually, any royalty income of an author is allowable as deduction under section 80 QQB, limited to the ceiling of rupees 3 lakh. Here Mr. Raghavan received 2,75,000 for his literary work as royalty. So allowable amount of deduction will be 2,75,000 as it is not exceeding the cap of 3 lakh. If in the above problem Mr. Raghavan would receive 4,26,000 as royalty, his deductible amount would be limited to 3 lakh only, because the maximum ceiling of deduction under section 80 QQB is 3 lakh or the actual royalty income, whichever is less. Deduction in respect of interest on deposit, savings or fixed, section 80 TTA and 80 TTB. Mr. Jain received interest in savings bank account from State Bank of India, Post Office Savings Bank, etc., aggregating 13,000 in the previous year 2024-25. Here maximum allowable deduction under section 80 TTA in the hands of Mr. Jain, being not senior citizen, is limited to rupees 10,000 only. Mr. Das, a senior citizen, received bank interest, savings and fixed deposit of which 47,000 in the previous year. As Mr. Das is senior citizen, deduction under section 80 TT is available up to a maximum of rupees 50,000. But here Mr. D received actual bank interest savings plus fixed deposit 47,000. So amount of deduction is 47,000. 80U. This is deduction in respect of personal disability of taxpayer. Mr. P, a resident individual, spent medical expenses average 80,000 in the previous year 24-25 for medical treatment of his disability for certain disease duly certified by prescribed authority. So as Mr. P, a disabled person, spent 80,000 irrespective of actual expenditure, 75,000 is allowable as deduction for disability up to 40%. Mr. Das, a person with severe disability 80% and above, spent 1,12,000. So in this case, under section 80U, irrespective of actual expenditure, Mr. D will get deduction under section 80U to the tune of rupees 1,25,000. Mrs. Sunita Patel spent medical expenses for medical treatment of her, but failed to attach the income tax, attach the certificate of disability in her income tax return. As Mrs. Sunita failed to attach the copy of the certified copy of the appropriate medical certificate in support of her disability, the deduction is not available to Mrs. Sunita. Okay, thank you.